how could reducing the pace of the Fed's asset purchases affect Bitcoin? On December 15, 2021, the U.S. Federal Reserve policymaker Jerome Powell announced that it would double accelerate, reducing the asset purchases program from the market from $15 billion to $30 billion monthly. The purchases of U.S. Treasury securities will be cut by $20 billion and mortgage-backed securities by $10 billion. The Fed's decision to accelerate the tapering of economic incentives will decrease cash injections into the U.S. stock market, which will slow down its growth. In response to this event, the crypto market is in a relatively unstable state since the Fed's decision may lead to a collapse of the U.S. stock market, which will inevitably pull cryptocurrencies down with it. In addition to the Fed's actions impacting Bitcoin, the growing presence of institutional investors also increases correlation in the medium to long term. At the same time, even if the cryptocurrency market crashes, it can be assumed that Bitcoin will recover relatively quickly and move to growth, as occurred in March 2020, since the concentration of retail and institutional interest around Bitcoin is now very high. No significant signals are foreseen for this interest to wane in the foreseeable prospect. During the Fed's press conference on December 15, 2021, many important things were said that will affect the cryptocurrency market in the medium term. According to Fed Chairman Jerome Powell, the regulator is surprised that people who have lost their jobs during the lockdown are not planning to look for new jobs in the coming months, as they have good savings. These savings were created due to the growth of savings-focused companies, that is shares of junk, unprofitable and over-indebted companies, the growth of the crypto market, the real estate market, and more. To summarize, even if the crypto market plunges into another crypto winter, which may happen between March 2022 and November or summer of 2022, when the asset purchase program is completed and rates are raised, the second half of 2023 can expect a new Bitcoin bull cycle in anticipation of the next halving, which will take place around the spring of 2024. Crypto investors should prepare for abrupt changes in the Bitcoin exchange rate and not give in to panic, since from a macroeconomic point of view, Bitcoin still has the potential to grow to $90, $150K. The only question is when this potential will be realized. You also need to be prepared that double accelerated curtailment of the economic stimulus program will certainly provoke severe turbulence in the stock and cryptocurrency markets.